Hi everyone, my name's Darryl Panes, CEO at As Good as Gold Australia, and today once again I'm joined by my brother Brian, a partner at As Good as Gold, and this afternoon we interview John Adams, Chief Economist at As Good as Gold Australia. How are you, John?
Good, mate. How you going?
Well, I'm going very well. The world, I feel, probably thinks differently at the moment. Chaos over the last week, as we all know. Mainly brought about, I guess, by the coronavirus and how that's starting to develop around the world, spreading to, I think, 60 countries around the world now. Created enormous volatility in the stock market, lost something like 14%. The Dow lost 14% of its value over the 1 week period and 4% on the final day last Friday. So volatility, concerns of this virus spreading, resulting in the stock market crash. By the way, that crash was the fastest since 2008 and the GFC. So it is quite monumental, and it doesn't look as though it has the ability to subside. It just looks as though it's under enormous pressure at the moment. And I think before I ask you a relatively probably obvious question, I was listening to Chris Martenson just going back a couple of days ago, and Chris said, and I have enormous amount of respect for Chris, and he said some people are out there thinking that this virus is just a flu. He said it isn't. And really think about this for a moment. As he said, if this was just a flu, do you think that China would have gone to these lengths? So what we're talking about here is shutting down their whole operation, their manufacturing, all business out of China. It's just stopped. Do you think they would do that and risk their economic future that they have been working hard at developing for the last 50 years? Why would they do that?
That's more than a flu.
It's more than a flu. And so, Chris really had to highlight this as a major point. So what I would like to ask you now, John, Australia is obviously now starting to become affected. Until recently, it was, I think, it's not going to happen to us. We've recognised now it's on our doorstep. What do you think Australians and the rest of the world, how do you think they should be thinking now re-coronavirus, and what impact do you think it's going to have moving forward from here?
Thanks for the question, Darryl. So I would say there's probably two aspects. There's the medical aspect, and then there's the economic aspect. So obviously, I'm not a trained medical practitioner. So I'm not going to sort of get into that area. But obviously, if you listen to Chris Martenson, who you just referred to, who does have some qualifications in this area, he did say that, again, it's not the common flu. There are some very bad signs about this. And we've already heard a number of world leaders talk about this is already a pandemic, and it's actually growing. Part of the issue on the medical front is China is not very transparent about what's actually happening in China. So we hear a lot of anecdotal stories. Some of them are very alarming about how far it's spreading and what actions the Chinese government is actually undertaking. Now, when we look at the virus outside of China, South Korea, I think there's about 3,500 cases. I think globally, 3,000 people have died. It's quickly spreading in Iran and Italy and a couple other places. I think that the latest report I heard was the coronavirus is in 69 countries, and a lot of these new cases have just happened in the last 9 days. So it's from a medical point of view, it's moving very, very quickly, and it's too soon to tell about can they get this under control, or could we see something as bad as the Spanish flu in 1918 in terms of how it could actually affect world health how it could affect the health of the world population. Now, on the economic aspect, so there's a couple of things to say here is that, a couple of weeks ago, I did a video with Martin North where we said that economic Armageddon started on the 17th of September 2019, and this is when the repo market broke, where the interest rate went from 2.4% to 10% in a day. And since then, the Americans have thrown $500 billion at the repo market to keep it stable. So it's before the coronavirus, it was clear that the financial markets were in trouble, and that the world central banks were throwing huge sums of money at the financial markets to keep it stable. So not only just in America, but around the world. But I think what the coronavirus is going to do is actually going to accelerate how problematic in terms of the economic effects of this debt bubble is. So obviously, you mentioned that the Chinese economy has been effectively shut down. Tens of millions of people have been either placed on the quarantine or they can't move out of their cities. I've heard reports of in some factories only 10% of the workforce is showing up. So production has actually slowed. There's a key metric called the PMI, the Purchasing Managers Index, which hit 35 for February, and that's a record low. So we're starting to see some data saying that China has fallen off a cliff, the Chinese economy. Although a couple of points there is one is that it's data is always lagging, so it's always a lag indicator because things have to happen first before you can measure it. So we're not going to know the full economic impacts of the coronavirus on the economy for a few months yet until we see some new data, particularly for the data that represents the first quarter of 2020. In terms of going forward, because there is a lack of production, what that means is that Chinese companies are going to generate less income, and if they generate less income, it means that they can't service their debts. And one thing I will credit Harry Dent with. Harry said that of all the debt bubbles in the world, the biggest is the Chinese debt bubble. And one of the big areas of where the Chinese economy has too much debt is in the corporate sector. So you have banks, but you also have non-financial corporations in China with huge sums of debt, a lot of zombie companies, and now they can't generate income. So that's obviously going to place huge pressure on these companies to actually service their debts. And if they can't service their debts, and you start to see a series of bankruptcies, well, that's going to spread right throughout the global financial system. And we could basically go into not just a mild recession, but a deep recession very quickly going into 2020. So because of that, there's an incentive. So the Chinese in the last, I think, 3 weeks have thrown already a lot of new monetary stimulus and fiscal stimulus at the Chinese economy, trying to keep some of these companies in, try to keep them in operation. Tomorrow, so we're recording this on Monday. Tomorrow is Tuesday. The RBA here in Australia is going to meet. The market's already pricing in 0.25% cut to 0.5. Some in the market are thinking that they could actually cut by 0.5%, which could take the official policy rate down to 0.25. Christopher Joy at the Australian Financial Review is already calling for quantitative easing to start tomorrow. So we'll obviously have to see what the RBA says. But obviously, Jerome Powell last week issued a press statement saying the US Federal Reserve is ready to cut aggressively. So basically, it comes down to this debt bubble, and the coronavirus is going to make the debt bubble harder to service because not only just in terms of the Chinese economy slowing down, but when you look at trade flows, investment flows, in terms of the Australian economy, commodity prices have fallen, the price of oil has fallen off a cliff. In terms of tourism, in terms of international students, so a lot of businesses will struggle to make money in the first quarter of 2020, maybe even the second quarter. And the question is that will they be able to maintain their debt serviceability? Even if there is more stimulus thrown at the problem, will that be enough to stabilize the financial markets and this global debt bubble, but also the Australian debt bubble? So if the answer is yes, then what we could see is we could see some relative stability, but obviously the currencies are going to take a hit. If they can't stabilize everything, we're going to have a very quick and rapid fall into a deep recession, probably in the second half of 2020. But again, a lot of this is too early to tell. A lot of it is speculation, but so far the signs don't look very good.
I have a very good friend, second longest serving friend, who has a considerable business, John, exporting wine into China. So his base is in Guangzhou in China. I was speaking with him the other day and he said, I've got a number of containers of wine just sitting on the docks, nobody to pick them up. I've got 80 people on staff, none of them are at work because they can't go to work. So they've all been confined to their homes. And he said, I'm just looking at this at the moment, and a considerable amount of his business is exporting wine to China. He's the biggest in Australia. But you think about it, there are, I'm sure, hundreds and hundreds and hundreds and hundreds of wineries who would be exporting to China, and I know the numbers around 50, that represents about 50% of their business. Now, it's all sitting on wharves at the moment. Nothing's happening. And so my very good friend said, well, Darryl, if this doesn't clean up within the next month, 6 weeks, he said, I see hundreds of thousands of businesses in China just shutting their doors for good. Because as you mentioned earlier, they've got obligations to banks. We can imagine how this is going to impact on the banking sector. This is unraveling as a very, very, very nasty situation. And I think it's probably been underestimated a little by most people. But you pointed out pretty clearly, John, but I'm just emphasising how quickly this could happen. You know, businesses just can't keep running without making or generating sales or producing parts. And at the moment, it's come to a halt. It's a little bit like, as Jim Rickards used to say, and probably still does, that it's that snowflake. You know, it's that snowflake on the edge of a snow-clad peak, and that one snowflake lands and it just causes the avalanche. That's all it needed. And our economy, as you've said, was just in such a poor state that this is the snowflake. It's tipped it over the edge. And if it can't recover in the next month or two, John, this is going to be a very, very nasty period that we're entering into. You'd agree with that?
Absolutely.
Yeah. Just quickly, and I won't spend a lot of time on this, but I thought it was just a very interesting point. Talking coronavirus, one also talks health. And I was only thinking the other day just about what it's costing citizens in this country in their 50s, 60s onwards, it would be more so, but what it's costing them to maintain good health. To talk about inflation here, I just want to share some numbers with you, John, that say somebody, a husband, wife, 50, 60 years of age, this is what it's currently costing them, because I'm speaking to them every day and they're finding it more and more difficult all of the time. Their private healthcare cost is around $350 a month, husband, wife. Alternative medicine, now this might seem a lot, but I've met a number of people that are spending far more than I'm about to quote. But people who are spending average around 50s, 60s, keep that in mind, $800 a month, that's $400 a month per person. Now, if one of those people were on the cannabis oil, CBD, then that's going to cost them $300 a month on its own anyway. So you start looking at herbs, supplements, good healthy food, they're up for $800 a month. This is coming direct from them. $30 a month for a chiropractor or a physio. And once your private healthcare cuts out, it could be considerably more than that. I've got here laser treatment, cold laser treatment. So many of these people with arthritic conditions now are turning to cold laser treatment, apparently quite effective. So that's a couple of $100 a month. They're not cheap visits. Eyes, you wear contact lenses. You've got to have your contact lenses. You've got to have your eyes checked annually and you've got to have your contact lenses replaced. $30, $40 a month over a given year for two people. Teeth. $300 a month. Average, that's $3,600 a year. Sounds a lot. It's $1,800 per person. Only need to do a crown each, and it's $3,600. It's $300 a month. Skincare. Somebody, and I speak to a lot of these people who do like to look good and protect their skin. They're spending around $300 a month on skincare for themselves. So that all adds up. Here's the scary thing, John. That all adds up to over $2,000 a month, which is the cost of a lot of mortgages. So your healthcare can cost you almost as much as your mortgage payments over a given year. Now, this seems absolutely absurd to me, but it's indicating that we do have inflation. We have serious inflation in this country, and it's really impacted enormously on the cost of living. Now, when I made reference to those numbers there, I didn't talk about organic food or anything like that, which would send the numbers through the roof. But it's why I'm highlighting this is that as we enter into our 50s and 60s, it becomes so important that we do protect our wealth. And at the moment, as Egon von Greyerz would say, I can't think of any other market at the moment that I would even consider. So precious metals at the moment are so important. They're important for everybody to consider. But as one ages and one needs more to spend more time and attention to their health, these costs are just going to go through the roof. It is essential that one protects their wealth in these circumstances. Do those numbers surprise you at all, John?
You know what? So I think those numbers would actually surprise the government, because the government keeps on telling us inflation is low, and you say inflation is high. Now, I actually agree with you that inflation is high. One of the things I want to actually focus on through a series of articles and videos throughout 2020 is to talk about inflation. I have made previous comments in the last few years about the consumer price index and how that doesn't fully reflect the amount of inflation that Australians are experiencing right throughout the economy. So I think there is a complete disconnect between what Australians are facing on a day-to-day basis in healthcare, but also in a whole host of other costs, that they experience throughout their daily lives, versus what the government says, people are suffering in terms of inflation. So when you have the other point I'll make, Darryl, is that when you look at, say, Venezuela or Zimbabwe or Germany with hyperinflation in 1923, when you do, or even in America in the 1970s, I mean, when you do have episodes of high inflation, certain groups disproportionately get impacted more so than others, and typically it's older people, particularly who are on fixed income sort of arrangements, also children as well. So obviously, if you're talking about people in their 50s and 60s now, some of those people may still be working, and even if you are working, wages growth is quite low. And with wages growth quite low, cost of living is actually outpacing wages growth. So those people are being squeezed. For those in their 60s and 70s who are retired and who rely on their retirement savings so that they can actually fund their healthcare treatment and their lifestyle. The essential point you're making is that if you haven't taken steps to preserve your purchasing power, whatever retirement savings you have, it's not going to be enough to actually keep up with these costs. And if your purchasing power, if you lose it, then your health and your standard of living will actually decline in your older years. And I've read a lot of horror stories from some of these high inflation in terms of these high inflation countries. What happens to older people if they're not prepared? A lot of it is a lot of suffering. They can't afford healthcare, premature death, and so obviously you and Brian are much older than I am.
Thanks for that, John.
I have to say, with the cost that you're referencing, I'm not necessarily looking forward to growing old in this country. You make a very important point that particularly as central banks ramp up the printing presses throughout 2020 going forward because of this huge debt bubble, there is even perhaps more incentive for older Australians to be more prudent around protecting their purchasing power because they need to fund their healthcare and their living expenses going forward. And I suspect that's going to be tougher in the months and years ahead.
Well, I'd agree with you 100%. I mean, like, I just sense that as one gets into that age bracket, they become far more vulnerable. And I just don't think they're expecting these costs to be there. I really got the shock of my life. And when I spoke with a number of people and said, do you realise that good healthcare, if you really want to stay on top of things, can cost you as much as a mortgage? And no one believed me. We sat down, did our numbers and blew them away. It's scary. But okay. Thanks for that, John.
John, for my part of this interview, I've got three questions that I formulated, and the two are on, obviously, Darryl spoke right at the beginning about what's happening worldwide and obviously in Australia with reference to the stock market and Dow Jones falling and whatever. And because Darryl and I are on the phones every day and the prices of gold and silver are going down, going up, then down, then going up again, I've just got to ask a couple of questions there, and then we're going to be talking about a favourite of yours, which is your $10,000 cash transaction ban. So I'll put that one in the middle to break it all up. Okay, my first question. I see, John, it seems that margin calls in the US have been used to cover losses on the Dow Jones, and therefore a drop in the gold and silver price temporarily. First, can you describe what a margin call is and how quickly do you think gold and silver will bounce back?
First point I'll make, Brian, is obviously we would have seen that gold and silver took a bit of a tumble late last week, and obviously I was getting inquiries from people across the country, some of our clients, and I'm sure you and Darryl got some inquiries as well.
Yeah, absolutely.
So now there was a couple of different explanations as to what triggered gold and silver to fall, whereas you would expect that if the stock market is falling and people are nervous about the economy and the financial markets, you should start to see a rush of gold and silver, people rushing to gold and silver and prices going up. So one of the reports that I read late last week and over the weekend was that a lot of these, if our viewers remember from our last interview when we talked about how prices in gold and silver, how they are sort of made, they're made through these exchanges with the COMEX and the LBMA. So they're basically they're future contracts, paper contracts of buying and selling gold and silver. So the explanation was that a lot of as the gold and silver has been going up, a lot of this purchasing of these future contracts has been have been bought using debt. So people have taken loans, bought these future contracts, and these loans have certain conditions. And basically, if the margin of these loans, and these loans could be for gold and silver, or these loans could be for example, buying shares or bonds or options, etc. If these loans fall down, so whatever a financial asset you've bought, if that asset has fallen a certain percentage, say 10%, well, then the lender is going to call in the loan and basically say, well, your shares, which is the collateral against this loan, has fallen 10%. Well, we're nervous about your ability to service the loan, so we're going to call it in. And so when you get a margin call, it's basically when the lender says, well, your asset has fallen by a certain percentage that we pre-agreed in our contract. And so basically you now have to pay the whole loan out. And so there was a view that certain people had to sell gold and silver in terms of these future contracts so that they can cover some of these margin calls and some of these margin calls could have been in all sorts of financial assets. And that was the trigger for why prices fell down. So that's one of the many explanations that I heard in terms of what happened late last week. Now, in terms of how soon could prices go and how soon could prices recover? One of the things I will say is that I'm not necessarily concerned about short-term fluctuations in terms of gold and silver prices. I go back to my central thesis of what's been driving my body of work is we have the biggest debt bubble in the history of the world. Central banks are doing anything and everything they can to keep this bubble intact. And as the economy slows, they have to print more and more money so that the debt bubble doesn't implode. Otherwise, we have a huge depression. Now, just to go back to the coronavirus for one point I didn't make, and I think this is important, is that so one thing I said was that if with this, so they're going to start printing money very soon, they're going to start cutting interest rates, and I said that if that's not enough to stabilize the economy, and the coronavirus actually has a harder impact than what people perceive, we're going to go into a deep recession in late 2020. Now, one of the things that I suspect that's going to happen is that, again, if we have a recession, if the economy starts to contract, now if they don't do anything about that, it could completely get out of hand, and we could have another global financial crisis, worse than 2008. So what I suspect is going to happen is that so even though they're going to start printing in quarter one, quarter two of 2020, if we do go into a deep recession in late 2020, what I suspect is going to happen is that they're going to even increase the money printing to an even greater extent in the second half of 2020, and that can only be bullish in terms of gold and silver. So I think that the main gain, in terms of what people should be focusing on, is not short-term fluctuations in the prices. They should be looking at, have a look at this debt bubble. Is it contracting? Is it expanding? Can people service these debts? Is it getting harder for people to service these debts? And just remember that the way central banks are behaving, they're behaving in a way that they're doing anything and everything to stop the debt bubble from imploding. And the only thing they can do is print. And ultimately, that's going to lead to a failure in the currencies, whether it's the Australian dollar, the American dollar, euro, yuan, Japanese yen, etc. So I always go back to first principles about why am I doing what I'm doing in terms of these YouTube presentations, and why am I with As Good as Gold? Why have I been buying gold and silver for 3 years? And it really is this central point of this debt bubble and what they have to do to keep this show on the road. Even with this short-term dip, I plan to buy more silver and gold this week. I think it's a buying opportunity purely because they are going to ramp up the printing presses, and that should lead to further increases in gold and silver prices going forward throughout 2020 and into 2021.
Right, fantastic. Great answer. And basically, to summarise for the clients, is the margin calls. And what I got out of that, John, was that the gold and silver contracts that were sold, and therefore pushing down the price of gold, it just shows how liquid gold and silver is. They have instant money. 24 hours later, it's there. They can pay off their margin calls and get on with the business of obviously loaning more money out than what they did before. But at the end of the day, it just becomes an absolute mess. I'm going to go on to another question about the transaction ban here in Australia. Mm-hmm. So Darryl mentioned so many factors influencing markets at the moment. So I need to bring the cash ban limit policy to your attention. The inquiry report into the government's 10,000 cash transaction ban was released last Friday here in Australia by the Senate Economics Committee. The report called for Parliament to pass the law subject to a series of conditions. Can you please explain the implications of the inquiry report to our audience?
So there's a few points to make. So you are correct. The inquiry report was handed down on Friday. There was 8 recommendations. The first 7 were the committee asked the government to do a series of things. And then the recommendation 8 was based on you doing these 7 things, the committee is saying to the Senate to pass the legislation. Now, we need to see in terms of this week, what's the government's response to these recommendations. Now, we're not going to spend a lot of time about this about the cash ban and the implications. I should say that with Martin North, we released a 50-minute video only yesterday on our YouTube channel in the interest of the people. So if people want to dive deeper into that, topic, they should go watch that video. But I think the implications is that one of the things that I've been arguing for more than a year is that this issue is linked to negative interest rates and being trapped in the banks. Now the government and the Senate committee has rejected that argument, even though there's plenty of papers from the International Monetary Fund and a whole host of other sources saying that if you're going to have negative interest rates, you need to eliminate cash. So the committee referred this to this point as a conspiracy, and they said they reject the conspiracy. Well, one of the things that I pointed out in our recent video with Martin was that who also stated this conspiracy. It was actually the Black Economy Task Force final report. So they make a reference to Ken Rogoff on page 48, which is to say that eliminating cash will actually benefit the effectiveness of monetary policy, and this is all about negative interest rates. And so in the last 48 hours, the famous American investor Doug Casey, who's a very well-known figure in the precious metals community, he issued a newsletter to his subscribers talking about Australia's cash ban and saying this is all about being trapped in banks because of this debt bubble becoming more precarious. They're doing anything and everything to keep the banks alive, and it's all about trapping people in banks. And the other thing that I would state is that former South Australian Senator Corey Bernardi was on 2GB on last Friday, and he also made the point that this is all about being trapped in banks. So I think. Now, we don't know exactly when the government's going to bring this to a vote and in what form. So we just have to wait and see. So it could happen in the next 3 weeks. It could be something in the next 3 to 6 months. The committee did ask the government not to make this law until the 1st of January 2021. So they basically said that certain businesses need time to prepare for this, for the legal implications of this law. So we could well be. In terms of this becoming law, we may have a reprieve for another 10 months, and it could start from 1 January. So we just have to wait and see. But so obviously we're seeing tomorrow that the RBA is going to cut rates. We could go to 0.5%. We could go to 0.25. So I think people just need to be aware of if we go to QE, if we go to negative interest rates, if the banks get into trouble, we're going to see more and more attempts to trap people in the financial system, in the banking system. It's going to be harder to get your wealth out, whether it's in cash or gold and silver, etc. So I think that's the main game, and people need to be aware of what the government's really doing and why they're doing it in the context in which they're doing it. One of the concerns that I have, Darryl and Brian, is that I've had a couple of as good as gold clients approach me last week. And they said one in Sydney and one in Melbourne, and their friends basically said, well, we don't believe this, this cash ban is even real. I had one person in Sydney talk to their best mates, and the comment was, the government wouldn't do this to me.
Of course not.
A completely ridiculous proposition. And then one of our clients from Melbourne, he was saying that he told about 10 people within his social circle, and 5 of them thought that that this was not true, and this was a conspiracy theory. So I think there's a lot of gullible sheep out there in the Australian community. A lot of people are not familiar with in terms of the economic context, why gold and silver is important, why is it important to actually develop strategies to retain your wealth and to protect it. And what the government's actually doing to actually trap people in the financial system. So unfortunately, we gave it our best shot. Now, it's still hasn't come up for a vote. So technically, it has not passed the Senate, but it looks like it will. So now there could be a Hail Mary at the 11th hour where it could still fail the Senate. But if Labor votes for it, which is what the indication as of today is, I think this is going to make Australians more concerned about about how free they are to preserve their wealth. And what I would say to people is try to be vigilant, try to be educated about all of these issues that we're talking about, and particularly if the Parliament does pass a law, people need to take independent action to preserve the wealth and maintain their economic freedom. And that potentially could include holding some of your wealth offshore. And one point I will make is that, and I'm sure Brian, you and Darryl you guys will comment on this, is that sometimes we do have clients, Australian clients, who want to store or vault their precious metals in Australia, and sometimes we get requests of vaulting some of their wealth, to some international locations, whether it's Singapore or Switzerland or North America, etc. So I think one of the consequences of this cash ban is that it's going to make people question about holding money in banks, and also holding cash. But also, if you're going to hold physical metal, well, where does that metal reside? Will it actually be stored and vaulted in Australia, or will people start to think, oh, well, maybe I'm not sure if I should, keep my life savings in this country, and maybe I should start spreading it to a few different locations around the world.
Yeah, there's from what I see, a lot of good points in there, and a lot of things to discuss for the future. I think for me, freedom of choice is essential, the ultimate. You must have freedom of choice. That's what freedom is all about. The other thing that comes up to my mind is also the situation in Europe, and an Australian dollar, I think, equivalent to approximately or $10,000 transaction is equivalent to a 6,000, maybe 7,000 euros in Europe. Well, I know there's a number of countries in Europe that I know of that have got this cash transaction ban, and they're down to anywhere between 1,000 euros and 2,000 euros. So I got this funny little feeling that it's not going to stop at $10,000. I think it's going to go south of that figure over a period of time. So my next question is all about, again, the price of silver and gold, but we've already gone through a little bit of that, so I'll keep it short. But what I did during the week, I read an article from Michael Oliver from King World News, and he basically stated that in practical terms that once silver and gold, or silver in this particular application, once silver reaches $19 an ounce US, it's not going to take, and he's talking about probably not even more than a couple of months away. He said from 19 to 30 is going to be in a blink of an eye. What's your comments on that?
What I would say, I'll probably make one or two comments. One is that kind of like, so I think it comes down to in terms of the global debt bubble and the ability to service that bubble. So obviously, if we see economic activity fall off a cliff, whether it's the coronavirus or whether it is because of a whole host of other factors, if the central banks ramp up money printing, that's going to be very bullish in terms of gold and silver. But having said that, kind of like we said in our last interview about gold and silver price manipulation because of the COMEX and the LBMA, I'm always cautious about giving specific price forecasts because the prices are heavily manipulated by these exchanges. Yeah. So now, could it explode quite rapidly potentially? But so I would urge people about so I think I always think about gold and silver in terms of risk. It's kind of like insurance. What are you risking? What are you taking insurance against? You're insuring against money printing, the loss of purchasing power. You're taking insurance in terms of the financial system falling over, in terms of banks failing, etc. So that is where I think people should focus on: is what are the risks? Are the risks getting bigger? Are the risks getting smaller? And it seems to me, particularly as we started off this conversation about the coronavirus, going into 2020, the economic and financial risks are going to increase. And obviously, there's an incentive, like I said before, for the central banks to keep this bubble going. And there'll obviously be an incentive to print more money, to drive interest rates low, to start quantitative easing in Australia, in some jurisdictions to do negative interest rates. And interestingly, President Trump only in the last week is calling for negative interest rates in the United States. So he's look, I don't think there's much logic to Trump's thinking here, but he's a big advocate of calling for negative interest rates in terms of America. So when you get this sort of language from world leaders, from central bankers about money printing, negative interest rates, and even I think in the Financial Review this morning, there's new articles calling on the Morrison government to forget about a surplus, start running a big deficit, inject more fiscal policy, fiscal stimulus. It's all going back to John Maynard Keynes. Keynes basically
you can see it happening. Yeah,
absolutely. And so most people don't understand that John Maynard Keynes basically called for zero interest rates, and basically for fiscal policy to be ramped up, particularly when you're in a downturn. So all of those things that policymakers are embracing, it's all Keynesianism. It's all bad for managing the purchasing power of currencies. yeah, so with all of those ingredients happening around the world, and with the coronavirus, likely to intensify the economic impacts that probably started with the repo market last year. The forecast that gold and silver could go for a rip, quite aggressively in the next few months. I mean, so it's plausible, but I wouldn't hang my hat on a specific price forecast.
Good answer. Darryl?
I think I'm sure the signs for precious metals moving forward are seriously positive. I was listening to Jeff Clark the other day. Jeff is an analyst the senior analyst at goldsilver.com, and he made reference to, he did some forecasting. And what he suggested was that silver was going to accelerate in value over the next 12 months, somewhere between 100 and 200%. He said in the final run of this bull market, precious metals bull market, silver will have 20 to 30% increases per day. And gold-silver ratio, and John, this is what you've been talking about a lot of as well, of course, the gold-silver ratio could close into around 20 to 1. That's his expectations. What we all recognise, of course, is that when gold goes up, silver goes up, but silver rises a lot faster. Mm-hmm. And so he gave a couple of illustrations which I thought were really worth mentioning. And so it happens every time. This is what we've all got to appreciate. Every time that there is a surge in gold, then silver follows, but then surpasses the performance of gold every time. And so 1976 through to 1980, gold experienced a 717% increase over that period of time. Silver, 1,063%. 1985 through 1987, gold increased 75%, silver 97%. 1992 to 1996, gold 25%, silver 58%. 2001 to 2008, gold 289%, silver 383%. And of course, more recently, 2008, 2011, gold 164%, silver 367%. So it is seriously consistent. Robert Kiyosaki has always said, and more so of late, silver right now is the best investment in the world. It's a standout. And so what I've noted here, John, is that I've got a couple of questions I'd like you to cover here in a minute, and I think you'll enjoy this one, or me asking you this question. But there are warnings everywhere at the moment about where the economy is heading. Mm-hmm. And the Fed paper, this is out from the Fed paper just recently. Here's a quote from the Fed. A solution some countries with high levels of unsustainable debt have tried is printing money. Can you believe it? I mean, okay. In this scenario, and I'm reading it word for word, in this scenario, the government borrows money by issuing bonds and then orders the central bank to buy those bonds by creating money. History has taught us that money printing leads to extremely high rates of inflation and often ends in economic ruin. This is direct from the Fed, John. Do you want to pass a comment on that?
I mean, how ironic that the Fed is saying this in their publications, and yet this is exactly what the US Federal Reserve is doing. So, yeah, I mean, exactly. in terms of the process that you just described of printing money and then buying government bonds, I mean, that is quantitative easing. So now, the US Fed is getting into semantics. I mean, a lot of people saying that what they've done since the 17th of September with the repo market, that is QE. Because they basically printed $500 billion and they've been buying all these securities, all these bonds. A lot of it is short-term T-bills, like with maturity of 1 year or less. The US Federal Reserve is saying that quantitative easing is actually something slightly different. It's long-term debt, not short-term debt, but it's the same principle. If you print too much money, you devalue the currency, whether you buy government bonds or not. And correct. whether it's the Romans or the Romans, or even in modern times, Venezuela, they used to be a rich country. You look at South America, they used to be, like 100 years ago, actually in the late 19th century, Argentina was actually a very rich and advanced country. And look how many financial crises Argentina has had because of too much money printing. Zimbabwe used to be, a rich African country that went into ruin. Germany was quite wealthy in the late 19th century. By 1923, it was actually in ruin as well. So money printing is no panacea. But unfortunately, in terms of Australia, we have a whole bunch of people at the Reserve Bank of Australia, as well as the Commonwealth Treasury, who have been trained in Keynesian economics. They don't know anything else. I was brainwashed with this crap when I went through university and when I got my degree. I've said this before, but I'll be very honest. It literally took me a decade to get these ideas fully out of my head and to fully understand. So I understood what the mainstream orthodoxy was, and we weren't taught about, say, Ludwig von Mises or the Austrian school, or Ron Paul or Peter Schiff or anything like that. So I had to go search for these answers myself and do my own research. And through my own research, I could understand why was the things I got taught in university wrong, and what's the correct way to think about these things. And yet, a lot of Australians don't have high economic literacy to begin with. And yet, if they rely on mainstream commentators, the mainstream commentators are just regurgitating John Maynard Keynes. So for a lot of Australians who are not searching for the truth, they're going to be caught out. But you're right. And it goes back to even the question you asked me before, Darryl, about medical costs and living standards and cost of living. If people don't understand how inflation works, how money printing works, not only will they lose their wealth, but their living standards will their living standards will fall. And for a lot of Australians, it could be very nasty over the next 2 or 3 years.
Yeah. Now, agree with you absolutely, John. Another quote from a gentleman, Nobel laureate Robert Shiller, economist. I see bubbles everywhere. History shows the market could lose half its value. And we've already started on that note. We've lost 14% in the stock market over a week. The bond bubble is going to end badly. Yeah. Ray Dalio, Bridgewater Associates, a monetary policy endgame is coming. I mean, here's a gentleman's worth $17.34 billion. Yeah. I think he needs to be listened to. And this one, I'd like a comment from you again, John. It comes from the Dallas Fed. I mean, they're a significant organisation. Dallas Fed. This is a direct quote. Don't rely on the US dollar remaining the world reserve currency. How do you respond to that?
So a lot of people have been calling for in terms of the US dollar to basically lose its reserve currency status. So Ron Paul, who former presidential candidate, former member of Congress, has been warning about this for 2 or 3 decades. So we're now starting to see mainstream voices, including the US Federal Reserve. You had the governor of the Bank of England, Mark Carney, last year at Jackson Hole, also talk about we need a new sort of standard in terms of the global monetary system. Jim Rickards, this is the core of his thesis, that the US dollar is not going to stand at the pinnacle of the system, and we need some sort of new monetary standard that all major countries will accept. So what is that new standard going to be? Is it going to be gold? Is it going to be silver? Is it going to be the special drawing rights in terms of the IMF? Is it going to be a basket of currencies? Is it going to be a cryptocurrency? We don't know exactly what the new monetary system is going to look like, but the current system is completely unsustainable, too much debt. Bill Holter, who you've interviewed in the past, said that there is no chance the world can ever repay back the debt that we have. And the only thing we can do is just continue to print to keep this debt bubble alive. At some point, at some point, everyone's going to lose confidence in the US dollar. But even if you look at the last 2 or 3 years, the Russians have dumped US dollars, they've dumped US treasuries. So has the Chinese, so have the Iranians, so have in terms of Turkey and a whole bunch of other countries. So people are moving away from the dollar. In 2018, central banks bought the most gold since 1967, according to the World Gold Council. So we're starting to see this trend happening around the world. And again, as the Americans continue to print more and more money, have more reckless monetary policy, have huge deficits under Trump, and who knows if Sanders will become president, because the deficits will even get larger under Sanders compared to Trump. I mean, there does not seem to be any healthy signs for the US dollar going forward. So at some point we will have some sort of monetary reset. The last monetary reset was in 1944, when during World War II, when they all met in America to basically establish the current system, which was at the time the US dollar backed by gold. And then Nixon cut off the gold, closed the gold convertibility window in 1971. So we will go to a new standard at some point, probably in the next decade. But the world powers that be have to come together and actually have some sort of international monetary conference. And when that will happen, who knows? But when that does happen, if you're not positioned carefully to actually take advantage of whatever that new standard is, you could see your purchasing power and your living standard and your wealth being cut in, either half or by a big factor on the other side of the reset.
But we have been warned, John. See, we have the Fed, the Dallas Fed, warning us right now. So their comeback would be, well, we told you, we gave you plenty of warning. You didn't heed our warning. So
you are correct. And so, even on this cash ban, where the International Monetary Fund is talking about interest rates going to -5%, -2 to -5, in terms of when we have the next recession. So here's the thing. A number of these central bank organizations, these international monetary fund sort of organizations as well, I mean, in their technical papers, they're telling the world what's going on. The mainstream media don't understand this stuff. They're not reporting it.
No.
And one of the things, let me just be honest, on social media in the last 24 hours, people have called me a conspiracy theorist because of how I've linked this cash transaction ban to the IMF papers and to negative interest rates and being trapped in banks and the elimination of cash. And so if people don't accuse me of being a conspiracy theorist, I mean, look, I'm happy to have that debate. But a lot of people who throw these sort of stones don't actually read these documents. So they don't read in terms of the documents from the Dallas Fed, they don't read the IMF papers. And so people think we're crazy because we're talking the way we're talking, and yet they won't do the work. And yet, like you say, all of this is in plain sight. You just have to go search for the analysis. You've got to actually search for these quotes. And then once you piece it all together, then you can understand what's going on. But it's interesting that a lot of people think that there's a dark global conspiracy. Well, in some instances, the conspiracy is not hidden. They're actually telling you in their papers exactly what's going on, and you just have to read it and actually piece it all together.
Yeah, it's it actually gets worse or it intensifies, John. I'll just share a couple of quotes with you. These are direct quotes from former central bankers. Janet Yellen, just recently, former Fed chair, of course. Her quote, "Soaring US debt is the type of thing that should keep people awake at night. It should be a very significant concern. And yet for many people out there at the moment, it's not." Ben Bernanke, former Fed chairperson, "Monetary policy will not be enough to fight the next recession." Now we are entering the next recession. Monetary policy will not be enough to fight the next recession. Alan Greenspan. It's interesting, isn't it, John, how all of these former Fed chair people come back and completely reverse their opinion on the economy and how one should approach it.
Freedom of speech after the fact.
Yeah, after the fact, yeah. I mean, it staggers me. Alan Greenspan, "Inflation will inevitably rise. It poses the largest threat to the economy," which is exactly what we're experiencing and can expect to see intensify immediately. Mm-hmm. Mervyn King, now you'll love this one, John, I'd like your comments on this. Mervyn King, former head of the Bank of England. The world is heading for a political and economic crisis, which could unleash a financial Armageddon. I wonder where you got that from. And we are sleepwalking towards that crisis right now.
All of those people, Mervyn King, Greenspan, Bernanke, Yellen, 2 points. One is they're saying exactly the same thing I'm saying.
Correct.
So if people are going to call me conspiracy theorist, they've got to call all these globalists conspiracy theorists as well.
That's
but the
right.
other point is that when they're in these positions of power, do they do anything to actually improve the situation, or do they actually perpetuate the unsustainable debt bubble that we have today? They actually did the latter. They actually lowered interest rates, printed money. They basically told their politicians that they could just have reckless economic policies, and the federal or the central banks would come to the rescue by printing more money. And so I would say that those people, I think some of these people are trying to protect their legacy by saying, hey, we did an okay job when I was the governor, but then when I left, I tried to warn when things got out of control. Well, no, look, all of these people contributed to the current problem, and so when this Armageddon does happen, I think all of these former officials should be held to account, and particularly in the context of Australia, I've called for certain people to be potentially investigated for gross professional negligence, because that's what I think it is. When you advocate for reckless policies, knowing that it's going to ruin a people, a civilization, a country, you have to be held to account. You can't just lose your job and say, oh, well, I don't have a job anymore. We're going to pass the football on to the next person. I think if you contributed to the problem, you've got to face the music. And unfortunately, Australia doesn't have a good culture of that, holding people to account when they've done a bad job. But I think going into this crisis that we all see coming, whether it's prime ministers or treasurers or parliamentarians or central bankers in this country and around the world, certain people who played an active role to bring us to this situation have to be held to account in one form or another.
Yep, I agree. John, thank you again. Once again for your input today. It's always first class. As I've said, you do an enormous amount of research, and I believe the oncoming Armageddon that you've been talking about now for some time, it's not just you talking about it, John. We've got former Federal Reserve chairpersons, we've got governors of
all the big guns,
the banks, all saying the same things. So, thanks so much for your information over that last 18 months, John. It's been fantastic. And thank you for today. I know that Rick Rule just recently, John, said, no excuses. There are no excuses now. He said, this is the right place, the right time, and the right information. For anybody right now who wants to make $1 million, here's their chance. This is the moment that you have been waiting for. So that's Rick Rule, one of the smartest men in the country. I would like to say, and by the way, just before we go, we'll remind our viewers that we have Bill Holter coming up
Absolutely.
in just under a week's time. So we'll be interviewing Bill, and we were going to look at interviewing Bill in about a month's time. He said, no, let's bring it forward. There's that much happening. We want to get on top of this straight away. And he said the viewers need to see this. So that's in just over a week's time. It's just going to be a fantastic interview. So, and look, to our viewers, to our subscribers, thank you so much for supporting this channel. Very much appreciated. And so thank you again, John. To our viewers, subscribers, stay well, stay focused. Until next time, bye for now.
Bye for now.